Okay, this is BE 17.2, so we're going to identify the type of cash flow for each of these activities. So it's either operating, investing, or financing activity. So the purchase of equipment is an investing activity. The proceeds from a sale of a building, because this, like the purchase of equipment, is a long-term asset, that's going to be an investing activity. So what it comes in as is how it goes out. The redemption of bonds. So when you sell bonds, that's a financing activity. So when you redeem the bonds, it's also a financing activity. Now, depreciation expense, because depreciation is a non-cash activity. However, if we are doing an indirect method, it would be an operating activity because we would be starting with net income and we have to adjust from net income to cash basis. So you would have to take the non-cash depreciation expense and adjust it out of net income to get to cash flow. Payment of dividends. So payment of dividends is a return of the value created to the investors, to the people who purchase capital stock. So it has to do with the capital stock. So it's a financing activity. And then issuance of common stock. That's a cash flow in for financing purposes. All right, so now we're going to talk about, here's a multiple choice question about operating activities. So which is an example of cash flow from an operating activity? So we've got payment of cash to lenders for interest. So we've got receipt of cash for the sale of capital stock. So sale of capital stock, we know that's a financing activity. Payment of cash dividends to the company's stockholders, that has to do with financing activity because dividends are a distribution of value to the stockholders, so that's a financing activity. So we know it can't be none of the above. So, well, it could be none of the above actually because these two are financing. But when we pay cash for interest, that is going to be treated as an operating activity. So the answer to this would be A, which is an example of an investing activity. So receipt of cash from the issuance of bonds. So bonds is a financing activity. Payment of cash to repurchase outstanding capital stock. So that is a treasury stock. That is going to be a financing activity. Receipt of cash from the sale of equipment, that would be an investing activity. And payment of cash to suppliers for inventory, that's an operating activity. So investing would be letter C. Okay, so two ways to do your statement of cash flows. There's a direct method and an indirect method. So direct method is actually the method that GAAP would prefer that is used. However, the majority of companies actually do the indirect method. The indirect method starts with net income and adjusts it to cash flow. Both methods do the same steps for investing and financing activities. So, statement of cash flows, the basic format, you have your cash flows from operating activities, and you end up with a statement net cash provided. So if it increases cash, it's provided. If it decreases cash, you say used. Then you have your cash flows from investing activities. Then you have your cash flows from financing activities. So in each case, if the cash increases, you say net cash provided by, and if your net cash decreases, you say net cash used by. You total the activity in operating, investing, and financing, and that gives you your net cash increased or your net cash decreased. You add that change in cash to your cash at the beginning of the period, and that gives you your cash at the end of the period. And as we talked about previously, you have a last section down here, which are your non-cash investing and financing activities. So these are when you purchase investing uh, investing things, so property, plant, and equipment using debt or equity.